just pivoting around that 18,000 mark on the index. The Adani Group is under pressure.
The Nifty is down 200 points, sensex lower by 650 points.
Nifty is down 196 points. We also have the Bank Nifty, which is the biggest loser.
The market's picked up a little bit in terms of the losses. We're down 180, 190 points. The market is down 200 points lower, 17,911. It's a pretty poor close, all said.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track 6 hours of the day's trading action in just 5 headlines. I'm Nigel D'Souza. Let's get straight to the headlines for the day. Stock markets post the biggest fall in a month. The sensex loses nearly 800 points. The Nifty loses 200 points. All sectoral indices end in the red. Financials drag, while auto stocks support. An upbeat guidance followed by inline quarter helps TVS Motor raise 5% higher. Meanwhile, Bajaj Auto beats estimates in its third quarter as the profits rise nearly 23%. EBITDA is at record highs thanks to judicious pricing and better dollar realization. Pidilite's third quarter numbers miss estimates on all fronts. The volume growth comes in at 1% in comparison to the 3 to 4% that was projected. The company, however, remains optimistic on demand in future. SBI Cards also sulks after reporting a disappointing third quarter that saw the net interest margins come in at all-time lows, while United Spirits slumps 5% as costs weigh on margins amid lower revenues for the past quarter. Adani Group stocks fall after Hindenburg research raises concern over valuations and debt. Hindenburg also reveals short positions in Adani Group companies. Adani Group accuses Hindenburg of malafide intent and calls the charges stale, baseless, and discredited allegations. Production concerns help metal prices higher. However, strengthening dollar keeps prices in check. Metal stocks, though, close with marginal gains. Well, here's the lineup that we have for you on the show. It's a power-packed one, as always. In Market Opinion, we have Mir Vora of Max Life Financial, while in Corporate Voices, we have Rama Mohan Rao Amara, of the MD and CEO at SBI Cards. Well, let's start off with the day's market action then. The stock markets, well, they saw a sharp sell-off today with every sectoral index ending in the red. The Sensex was down close to 800 points. The Nifty lost close to 200 points. Bank stocks, well, they took it on the chin, and mid-caps were not spared either. Prashant is standing by to run us through with the day's market action. Prashant?
Well, it was deep red, the market losing 200 points in the Nifty. And if you're looking for one reason, a dominating driver, I don't think there's one to be found. It was a combination of things. Global cues overnight were poor. The market here has been underperforming global markets all of this year. Perhaps a little bit of nervousness ahead of the budget, which is in the middle of next week. So all of this combined adding to the pressure that we are seeing. Banks were also sold off pretty hard, perhaps more on banks as compared to non-banks. Nifty losses coming through in Adani Ports, and the Adani Group was another sort of pocket of pressure for the market. We'll get to more stocks in a bit. SBI was down, Cipla was down, Indusen, the HDFC twins were also sharply lower. Bajaj stood out at gain, but the numbers reacting towards the end. The numbers came out for the third quarter. Numbers look good. Lever, Hindalco were the other stocks which were higher. Market breadth was extremely negative, so I'll stick with losses. As I said, the Adani pack came under selling pressure. Adani Wilmar, Transmission, Green, Ambuja Cement, ACC, all seeing some selling. Zomato, United Spirits, Container Corporation, a fair bit of earnings disappointments also resulting to selling. Like, for example, in the case of United Spirits, Indus Tower was another earnings-led reaction. Traxim, the recent IPO, Kiri Industries were some of the other volume-led losses that we saw. The range this year has been 17,800 and 18,200, and today's selling gets us closer to the lower end of the range. The big support for the Nifty comes in around 17,761, which is the low which was made in January earlier. And for the Bank Nifty, it's looking a little more precarious. It did break intraday the December 26th swing low, but we managed to close above it. When we come back day after, I think bulls will hope that these levels are defended with some help, of course, from global markets.
Thanks for that, Prashant. Well, moving to the second headline now. Auto majors, they're in focus today with TVS Motors, Bajaj Auto, both of them reporting their numbers for the third quarter. Sonia standing by to run us through the wrap-up on all those three stocks. Sonia?
Well, thanks a lot for that. So Bajaj Auto just came out with their numbers a while back. The numbers were better than what the street was estimating. In fact, it was a good growth of almost 23% on the profitability for Bajaj Auto. But the big positive really came on the margin front. So the margins have improved to 19.1% versus 15.2%. And the EBITDA, the core EBITDA, has gone up by almost 30%, coming in at 1,776 crores. The management says this is a record high EBITDA that they have delivered this time around. And a couple of reasons that they have mentioned for the solid EBITDA beat. One is judicious pricing, two is better dollar realizations, and three is a richer product mix that has aided the margins this time around. So better than expected numbers and a strong operational performance. I expect the stock to trend up as we open on Friday. Now, the other stock in focus today definitely was TVS Motor. Very good set of numbers coming in, but I think what the street really liked is the management commentary, and the stock ended well in the green, up about 6 to 7%. Now, this time around, strong revenue growth of 14% for TVS Motor. You even had the margins that were consistently above 10% for the fifth consecutive quarter, and the profitability as well was up 22%. But what the street liked is the aggression from the management in the electric vehicle space. They spoke about how there's an improvement in the margin profile in Q4 as well because of raw material tailwinds, and they are planning to aggressively expand their electric vehicle franchise by adding multiple products across price points in the next 12 to 18 months. So good showing coming in from the two-wheeler majors. Back to you.
Okay, all right. Thanks a lot for that, Sonia. Moving to the third headline today, Pidilite. That stock was down close to 3% after its third quarter numbers missed estimates on all fronts. The volumes came in at just 1%. That compared with projections of around 3 to around 4%. The company, however, remains optimistic on demand as well as margin expansion in the near future. Manglam joins us to run us through those details. Manglam?
Well, as far as Pidilite numbers are concerned, they were weak, no two ways about it. As compared to our estimates and the street numbers year on year as well, they were, rather weak. 5% jump in the revenue year on year, but as compared to street estimates, they were lower by almost 4% as well. The EBITDA came in shy of 500 crores. We were working with a number upwards of 580 odd crores. As a result of which, the margins and the net profits, both of them were below expectations. The consumer business volumes grew just 1% as against street expectations of 3 to 4%, and the gross margins, while they improved a little sequentially, the management said that they were still sitting on high cost inventory, as a result of which there wasn't full improvement. But thereafter we had a conversation with them, and this is what Bharat Puri told CNBC-TV18, that while primary sales were weak because of high inventory in the base, secondary sales, which is what consumers buy off stores, was actually as per expectations. And from this quarter itself, they are likely to see improvement in the numbers. And for the fourth quarter, they do target high single digit to perhaps double digit volume growth, and they are yet to see some recovery in rural and semi-urban markets. But the key raw material that they have, vinyl acetate monomer, VAM, those prices have settled at around $1,200 as well. Back in the peak, they were close to around $2,500. So all this bodes well for their business in the near future and the medium term. However, today it's weak on account of weak third quarter numbers.
Okay, all right, Manglam, thanks for that. Well, moving on, SBI Cards was down close to around 2% in trade after posting a disappointing set of numbers. The net interest margins came in at around 11.6%, which was an all-time low. We spoke to Mr. Rama Mohan Rao Amara, the MD and CEO of SBI Card. He said that the cost of funds will increase by around 30 to 40 bips and NIMs will stabilize in the fourth quarter of this fiscal. Let's hear him out.
Cost of funds will increase, but we have absorbed most of this repricing, etc. So next quarter, we will be seeing maximum like a 30 to 40 basis point further increase in the cost of funds. NIM will fairly stabilize, maybe 10 basis points here and there, that movement can be there. But we are fairly confident that actually NIM will stabilize in the next quarter at the current level.
Well, United Spirits, that one was down close to around 5% in trade. It weighed down by pressure of cost on margins and lower revenues as well. Surbi is with us to run us through a quick review of those numbers. Surbi?
The revenue growth is just 10% on a year-on-year basis at 2781 crores, and that is also largely led by increase in prices on a year-on-year basis. Gross margins are under pressure. The gross margins are impacted by the high input cost inflation and is down 400 basis points. This is trickled down to EBITDA as well, which is down 12.4%, and margins are down 340 basis points. The company has spent 150 crores on a supply chain agility program, which affects their profitability as well. If you exclude that, the PBT is down 3% at 303 crores. Now, usually Q3 is really good for United Spirits because of the festive season, but both the segments, premium and popular, have just seen a volume growth of 3% odd. The realizations of the premium segment is up 8%, and that has led to majority of the revenue growth. The popular segment realizations is down 1% on a year-on-year basis. The company has sold stake in its wholly owned subsidiary, Sovereign Distilleries, for 32 crores and also made an additional investment in Now Spirits and Distilleries for 15 crores. The management has commented that they expect the inflationary headwinds to continue for the shorter term, so the stock could see some pressure.
Thanks, Surbhi, for that. Well, staying with earnings then, Pharma major Cipla reported a weak set of numbers for the third quarter. They missed street estimates on all fronts. Well, the revenues as well missed estimates. Came in at around 5,800 crores. The analysts were anticipating a number of close to around 6,200 crores odd. Cipla's margins were in line with expectations, coming in at around 24% odd. Moving on to Dr. Reddy's, well, it beat estimates in the third quarter. The profit came in at more than 1,200 crore rupees. That was well above expectations. The profit growth was more than 75%. Revenue growth was more than 27%, and margins were well above what the street estimated. So, mixed set of numbers coming in from both those two. But in Indus Towers, that stock was down close to around 6 to around 7% in trade after the company posted a loss of more than 700 crores for the first time. Reema's with us to run us through what went wrong with those numbers. Reema?
Thanks so much for that. So as you pointed out, Indus Towers has reported a loss for the first time ever, a loss of 708 crores in Q3. This is on the back of the company making a doubtful debt provision of 2,300 crore rupees against receivables from one of the leading telcos. Indus Towers does not explicitly mention which telco it is, but the understanding is it's Vodafone Idea, which has been unable to be making its payments to Indus Towers. So this is the third consecutive quarter that Indus Towers has written off some receivables from Vodafone Idea, and now cumulatively in 9 months, Indus Towers has written off close to about 5,700 crore rupees. Consequently, financials are under pressure, revenues down 2% quarter on quarter, margins have come down to 17.5%, and the company has reported a big loss of 708 crores.
Thanks, Reema, for that. Well, Tata Motors reported its performance for the third quarter after market hours. Sonia is here once again to run us through a quick analysis on those numbers. Sonia?
Well, thanks a lot for that. You know, it's looking like a very good set of numbers that Tata Motors has reported on a consolidated basis. It's a beat, and JLR, the performance is also quite good. So consolidated numbers, revenues have gone up 22.5%, coming in at 88,488 crores, higher than estimated. EBITDA has gone up 52.9%, and the margins have improved on a consolidated basis to 10% versus 9.4% earlier. Now, it's a big profit beat. Of course, you know, the poll generally, it's much higher than the poll, but generally because of the forex fluctuations, it's a bit hard to determine what the profitability of Tata Motors could be. This time around, compared to a loss of 1,500 crores same time last year, Tata Motors has returned to profitability in a big way. So there is a profit of 2,957 crores. Now, what the street will also like is the fact that JLR has delivered on its plans and achieved a positive free cash flow and profitability in the quarter as supplies of semiconductors have improved. The revenues for JLR went up 28% at 6 billion euros and up 15% sequentially, and the EBIT margin has improved to 3.7% this time, up from 1.4% in Q3 of last year. So there is a significant improvement that we've seen in the JLR performance as well. Just wanted to quickly take you through what the outlook of Tata Motors is from the management. They say they remain cautiously optimistic on the demand situation despite global uncertainties, will remain vigilant on demand, and margin improvement and positive cash delivery will continue in Q4 as well. So I think the street will definitely react positively to these earnings. Back to you.
Thanks for that, Sonia. Well, time to slip into a short break, but you stay with us. We'll be back in a jiffy with the remainder of the headlines.
अम्यूजमेंट पार्क तो बंद है.
The all-new Slavia. Skoda. Simply clever. For how long will you continue being tensed about the future?
with LIC's new Pension Plus. Make your own pension plan because this plan creates market-linked wealth for your future. Moreover, this plan comes with guaranteed additions and also offers various options for receiving pension so that you grow young and tension-free. LIC, har pal aapke saath.
It's the electric SUV with the fastest acceleration in India. It's the most spacious in the C segment and it can be yours now. Starts at rupees 15.99 lakhs. Bookings open on 26th January 2023.
The cost of getting the accreditation, maintaining it, and then getting it again. So recertification or re-accreditation. So that is where they find India and especially NAPH very attractive because they realize that they are as good as the others. And like India always claims with pride that our services come at a fraction of a cost and with the same quality.
Who am I? I'm going to be buying what you're going to be making. I want to know you're making a better world.
I'll give my money to the one who never robs the earth.
I'll spend my fortune on you if you promise to think of the less fortunate too.
I want to know you're making a more equal world.
I'll invest in your technology to put a man on Mars. But wait, why can't it be a woman? I'll click on your app, I'll walk into your shop.
As long as you're fair to the farmer and his crop. I'm gonna be buying what you're gonna be making. And if you make the world a little better too, no one will feel richer than you.
Life will test you. It will turn your world upside down. Again. And again. And again. The only way to hit back is to stand up. Stand up every time. And say, I'm not done.
This is the only planet we have. There is no alternative. It is incumbent upon us, upon you and me, to preserve it, to make it healthy, to keep it healthy. So that we leave behind a healthier planet for the generations to come. And we need to make choices which are environmentally friendly. We need to be a conscious, good human being living in sync with nature, not destroying nature. I want to congratulate News 18 and Tata Power for coming out with this initiative.
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything. Now, leave encashment, gratuity, and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC Pension and Group Scheme.
It's the electric SUV with the fastest acceleration in India. It's the most spacious in the C segment and it can be yours now. Starts at rupees 15.99 lakhs. Bookings open on 26th January 2023.
Welcome back. Well, let's run you through the remainder of the headlines. The shares of Adani Group, they came under pressure after US investment research firm Hindenburg's research revealed short positions and flagged off multiple risks. Adani Group, well, they hit back, accusing Hindenburg of malafide intent. The short seller, Hindenburg, said it holds short position in Adani Group companies through US traded bonds and non-Indian traded derivative instruments. The report said that the 7 listed companies of Adani Group have an 85% downside on a fundamental basis due to sky-high valuations. Hindenburg also claimed that the Adani Group companies have taken on substantial debt, including pledging of shares of the inflated stock price for loans, putting the entire group in a precarious financial footing. Adani Group responded to the allegation saying, and I quote, "The report is a malicious combination of selective information and stale, baseless, and discredited allegations that have been tested and rejected by India's highest court." End of quote. Adani also questioned the timing of the report ahead of the upcoming Adani Enterprises follow-on public offer.
The timing of the report's publication clearly betrays a brazen, malified intention to undermine Adani Group's reputation with the principal objective of damaging the upcoming follow-on public offering from Adani Enterprise, the biggest FPO by a private sector company in India.
Well, moving on to a CNBC TV18 exclusive then. Star Health plans to diversify into life insurance business. The insurer will apply for a composite license once the government clears the proposal and amends the insurance laws accordingly. Yash Jain is standing by to fill us in with all of those details. Yash.
Well, that's correct, Nigel. So, of course, so far CNBC TV18 has reported about how LIC as well as HDFC Life both want to enter the health insurance market. But this is different and more important since it's a health insurance company which wants to enter the life insurance space. What we've been given to understand from our sources is that Star Health Insurance is preparing itself to enter the life insurance market. The focus mostly is going to be on protection or term insurance products. The thinking is that these protection or term insurance products will be a perfect fit to the current product offering from Star Health Insurance, which is health insurance products. If you have a term insurance products also complementing the current product portfolio. Of course, all of this depends on whether or not the parliament session, the budget session, approves the amendments to the Insurance Act, whereby one of the amendment is also a composite insurance license through which a cross business will be allowed for general insurance and life insurance companies. If that happens, right after that, according to our sources, Star Health is likely to apply with the insurance regulator and for the regulator to consider Star Health's proposal of entering the life insurance market.
Interesting one. Yash, thanks so much for joining in and filling us in with all those details. Moving on to the fifth headline today. Production concerns help metal prices higher. However, strengthening dollar index kept prices in check. Metal stocks, though, they ended with marginal gains, though the rest of the market was lower. Manisha Gupta standing by to fill us in with more details on that space. Manisha?
Well, off its highs, but still trading on the higher side of the range is what the metal prices have been doing today. The dollar index has jumped back above 102, and that clearly was keeping the prices in check. But even with that, we have seen copper, aluminum, zinc prices trade at near 7-month highs. There is surge in the prices because of production concerns. There are a lot of labor negotiations as well coming into the next quarter. And then there have been mine disruptions, maintenances that a lot of smelters were put on. And the China reopening clearly has been a big factor that continues to play its role into the markets even now. The markets also are watching out at the power rationing which has continued in China and Europe, keeping a lot of smelters trading or working below their overall capacity. That will continue to support prices. Markets do believe that as and when there is demand that comes back into the market will be sharper than what the supply can catch up with. So when you look at the inventories as well, we started 2023 with a lot of depleted inventories here. We saw nickel inventories decline by 46% in the previous year. Aluminum declined 52% in its stockpiles. Lead inventories were down 54%, and zinc inventories fell by 85% in 2022. And many of these metals have started 2023 with a deficit there. So when you look at the prices already in Jan 2023, you have the copper prices up by nearly 12%, zinc is up by 14%, aluminum prices up by 10% as well, and tin continues to be an outperformer with 23% of gains in the month of Jan alone.
Thanks for that, Manisha. Well, on that note, we'll wrap up on this edition of Markets Today. Thanks so much for watching. Stay tuned to CNBC TV18 for more news and updates.
Presented by